Okay, folks, is another big drop, another breakdown about to happen to crypto and stocks, right? We just saw the markets panic sell off on Friday. By stock market standards, something like down 2.7% for the NASDAQ index, that's a big deal. So there could be a panic open on the Monday morning, right? I'm recording this on the Saturday evening, Saturday afternoon US time actually. And what happens is now the ABC pattern that I've been talking about is playing out, and I do think we're heading for the next leg lower. It may not be that much lower, but let me just show you guys what I mean by the ABC pattern and the next leg down. So for folks who have been watching my videos, the last 2 or 3 videos I've been saying this is an ABC pattern where we go A, B, C, leg down. And it's not the most obvious when you're looking at Bitcoin, right? But it's much more obvious if we were, say, looking at the SP 500, because this is where all the trouble started. So, for example, here. Now, if we have a look at this, then we have a very clear, this was the all-time high, right? All-time high here. And then we basically have A leg down, right? B leg up, and C leg down. And as I keep on saying, this 550 area should be very strong resistance. And we've had bounced off exactly off 550, had a 2-week bounce. And if you still doubt me, if you still don't think that Bitcoin is basically just copying the moves of the SP 500, well, then have a look at Bitcoin right here. Have a look at the correlation. So here's Bitcoin, and compared to all that has happened is basically Bitcoin topped slightly earlier and basically has been front running this whole move in stocks A, B, C. So we can look at Ethereum as well, and that's the situation that's happening. But where is the support level for all of them? Before we answer that question, let's first quickly answer, which crypto exchange does Pablo use? Well, Pablo uses this exchange that is non-KYC. That means you don't need to show your ID. That means the IRS can't see you, the CIA can't see you, the tax office can't see you, FBI, nobody can see you, totally private, right? And they're doing this great promotion with Pablo, but only on the Pablo link. Basically, chance to win a BMW bike, tour to Dubai, Rolex watches, just by joining and trading for a limited time only until April the 6th. And so if you are watching this on YouTube, then the link is in the description below. But if you're on some other platform such as this one, then basically click on my profile page, you get to this page, and it's in the Stan link right there. So just keep in mind, folks, this is the Pablo deal. It's the first thing that pops up, see? In the deal with Bitunix. This is the Pablo deal, and only on the Pablo link. Okay, let's get back to Bitcoin. So, first of all, we need to determine, where does the stock market bounce? When the stock market bounces is when Bitcoin bounces. Do we believe that now, or do we still not believe that? So I think the price action over the last few weeks has amply proven that. And I called for the bounce at 550 right here. Said strong support, and that's pretty much exactly what we got. And then Bitcoin bounced pretty much on the same day. Now, and once again, the reason why I called 550 is because of this large rising trend line. This is a spider ETF, by the way. Here is the whole picture. Okay, put it on the weekly so we have a better view. Basically, this is the reason why I've drawn this green trend line. We've bounced off this once at 550, exactly as I called it, and now yesterday, on Friday, we've just landed right, slightly higher, but right on top of this rising green channel as well. NASDAQ. So NASDAQ also A, B, C leg down. Now, by the way, just for folks who didn't watch my last couple of episodes, This is the ABC leg down. A, B, C, right? I mean, I spoke about that a number of times. So it's more apparent the NASDAQ Composite Index probably can catch a break around the 16.3K area, 16,300 area. For Spider, it's probably, it's once this 550-ish area breaks, then the next support is around 524. So that's still something like 4% more downside to go. For QQQ, support should be in this 440s area, right? Why am I talking about these? Because once they catch themselves, once they stop, right, I'm expecting an ABC pattern down, and when the C leg is finished at the support level, see around this 440 area for QQQ, for example, then I'm expecting the bounce. Once the bounce comes, then I'm expecting Bitcoin to follow. So, for example, if we apply that to Bitcoin, then what we can say is when the stock market does an A, B, C leg down and catches itself and starts bouncing, then I'm also expecting Bitcoin to bounce. So Bitcoin, my target is still around this 73K or low 70s area, right? That's been the target ever since this 92K area was broken. 91.7K support was broken. For ETH actually front run the drop in the stock market. ETH is playing out this ABC pattern more clearly. So we can just see A, B, C. But C leg tends to go lower. So for ETH, where's the support? Usually, right? Usually this 1700s, I would say, is support. We might dip a little bit lower into 1600s, like a wick down, but the 1700s hold and we go up. But since we just saw that the SP 500 has like 4.5% more room to drop from 550 to 524 area, NASDAQ can get to 16.3K area. So therefore, if Bitcoin goes to 73K, then I would think Ethereum would break down the 1700s and go to the next support area, which is around this 1525 area, right? 1525. So, ETH is looking like one of those interim bearish periods, right? Like we've had it here, interim bearish period, bounced up, interim bearish period. So I still think it can basically hit this and bounce up, right? However, for like even this one here, if we look at this period here, right, ETH was like 4,300, went down to 1,700, right? It's similar kind of a move, like a 55%, 60% crash, and then went on to make a new all-time high. So, and that was a very big, wild altcoins run as well. So, just because ETH is down a lot, it doesn't mean we can't have some sort of wild altcoins run in a few months. Because if we look at everything else, they're still in a bull market pattern. Even though things look not great, but have a look at. I mean, the biggest one is Spider ETF, the SP 500. So I wouldn't look at that chart just from pure technically, not looking at consumer confidence, not looking at credit cards, not looking at any of those other data. I wouldn't look at that and say, oh, technically, that's already a bear market. It's not great if it breaks this 550 support and goes into the green channel. It's not great, but still, we've so far had, higher high, higher low, higher high, higher low, because that was the previous low, higher low. You can on the weekly scale, and we can still get. At least, even if we go to 524 area, we can at least get still a big bounce here, or even we could say, hey, make a new all-time high. That's a blow off top. So that's still quite possible. What I'm not expecting is for it to go 524 and then boom and then boom. Usually they tend not to go down in a straight line unless we get into a major crash, like a 2009 scenario, like a March COVID 2020 scenario. That could happen, but I would say there's probably like 3% chance that something like that happens, 3 to 5% chance something like that happens right now. Yeah. So one more thing, just what happened on Friday was we had the bad PCE number, PCE inflation number, and the market sold off like 3% on the NASDAQ, and people were like, oh, why is the market panicking? Why is the market overreacting like this? Well, the market was not reacting to the bad inflation. What was it reacting to? Well, if the market was reacting to the inflation number, then basically we would see US 2-year yield go higher. It went down by 2%. That's a big move for the US 2-year yield. 10-year yield went down. 30-year yield went down, right? And in fact, even the US dollar went down. All of this went down. And also, when they should be going up, if the market was more worried about inflation. So also the probability of a Fed rate cut in May actually went up as well, when it should be going down if the market was worried about inflation, worried about the PCE. What they're worried about, let me show you guys what it is they were worried about is this. They were worried about the bond yields blowing out. This is, that's on a weekly scale. This is the bond yields on a daily scale. So we just saw bonds had a big jump, right? And that's a big move. And bond yields, basically, these are junk bond spreads. High yield meaning junk bonds. They don't want to use that word. Option spreads. So usually what that means is when you have your US Treasury bonds, which is the safest, and their yield is like 4.3% for 10 years or whatever. Then you have, when you lend to companies like Apple or Google, Microsoft, if they issue bonds, then their yield is like 1% higher, it's usually like 50 basis points or 0.5% higher right now. I'd say 4.8, 4.7%. But if you're lending to a crappy company that's in some trouble, then the yields will be a lot higher. But right now, as we just saw, the yields are only like 2% higher to 2.5% higher than the US Treasury yields. When the market, so that means the market is not panicking about a full-blown recession just yet. But what we just saw on Friday was the debt junk bond market sell off. So they are worried about holding junk bonds, right? So junk bond yields spread shot up. That's a sign of a starting financial panic, right? If it continues, then that's really bad. That's really sign of a panic. So stocks saw that and they started selling off as well. That's what caused, in my opinion, from all the evidence I've given you, that's what caused the panic sell on Friday. And what we need to be careful is, usually a panic sell like this on Friday tends to cause a panic sell on the Monday. A panic open on the Monday, gap down, and stocks sell off. Unless Trump or somebody comes out on the weekend to stop it, to say something or do something to stop it. Sometimes it turns into a Black Monday scenario where you have a very bad close on a Friday, which we just did, and then on the Monday, it gaps down lower and goes down more, and it becomes a panic situation. We saw that on August the 5th last year when the whole Japanese yen carry trade blew up. So if that were to happen, because I'm only recording this on the Saturday, if that were to happen, then basically Bitcoin and crypto usually front runs a move like that, and they will start dropping by Sunday evening US time. Traders will start selling because the US stock market isn't open yet until 9:30 the next day. So therefore, what can they sell to front run this move? Well, Bitcoin, ETH, and crypto. That's what happens. So that's something to be mindful of and watch out for over the next 2 days, over this weekend. But something that we should watch out for over the next few weeks is this, certainly the next few weeks, is the junk bond yield spreads. If that starts blowing up, then basically a financial meltdown, financial crisis could easily happen. That's usually a signal, and that's when the Fed really needs to step in, cut interest rates, cut NQT, and say they're prepared to come in with QE, do all of that, the whole financial crisis, the whole shebang. So that was a big signal that started to happen on Friday. It may not continue, so we just have to watch it really carefully. Okay, thank you for your time, guys. For all the Aussies out there, Pablo uses SwiftX exchange. The Pablo link is in the description below for SwiftX. For everyone else, thank you for your time. I'll catch you guys later.